I'm Matthew Galgani with the IBD stock analysis for Friday, September 5th. Today we'll check in on social media giant Facebook, which we last covered on May 2nd. CEO Mark Zuckerberg has been on a buying spree in recent years. He picked up Instagram in 2012 for $1 billion. And earlier this year, Facebook bought WhatsApp, a popular mobile messaging firm, for $19 billion, and Oculus VR, a virtual reality headset maker, for $1.9 billion. Last year, it also made a failed $3 billion bid to buy Snapchat, a popular photo and video messaging service. In terms of revenue, perhaps the most important move Facebook has made recently is its renewed focus on capturing mobile advertising dollars. That's helped drive sales growth ranging from 53% to 72% over the last 5 quarters. Earnings growth has also picked up, with triple-digit gains in 3 of the last 4 quarters. For the full year, analysts expect earnings to rise 84%, followed by a 25% gain in 2015. While Facebook's 16% return on equity is just under the 17% minimum you look for, the company earns a solid A for its SMR rating, which tracks sales growth, profit margins, and ROE as a whole. A big driver of that A rating is Facebook's stellar annual pre-tax profit margin of 47.7%. That has certainly caught the attention of institutional investors, and that's reflected in the B accumulation distribution rating and in the rising number of funds that own the stock. Last quarter, 125 new funds reported taking a position in Facebook. After the infamous Facebook faceplant following its 2012 IPO, the stock found its footing and broke out of this double bottom pattern in July 2013. Since then, it's gone on to form a second stage and third stage base. And here's where we last featured the stock on May 2nd. It went on to complete and break out of this cup with handle in July, but it failed to go up at least 20% before starting to form another consolidation. So this current flat base is also considered a third stage pattern. Note how trading within the base has been very tight. Let's take a closer look on the daily chart. Here's that third stage flat base. You can see how Facebook gapped sharply higher on July 24th, the day after it reported Q2 earnings. It closed over 5% higher for the day on volume 173% above average. Although it pulled back a bit after that, keep in mind that the general market outlook at the time was uptrend under pressure and later marketing correction. On August 13th, the market pulse outlook changed back to confirmed uptrend, and Facebook continued to build its base. The stock is currently on the leaders near a buy point screen in Leaderboard. One very helpful feature of Leaderboard is that our markets team continually annotates the chart for each stock on the list, highlighting any potential buy or sell signals. For Facebook, they noted a potential early entry of 76.09, 10 cents above this point of resistance. The stock cleared that price on September 2nd, but volume was light. On any breakout, you prefer to see volume come in at least 40 to 50% above average. The more traditional buy point in a flat base is 10 cents above the peak on the left. For Facebook, that's 76.84. During Wednesday's session, the stock cleared that price but pulled back to close below it. And as of early Friday morning, it was still trading just below the 76.84 buy point. So watch to see if Facebook can move decisively above that area of resistance on volume at least 40 to 50% higher than normal. And if you'd like to see what other stocks are on the leaders near a buy point screen and get ongoing alerts to any buy and sell signals, take a free trial of Leaderboard at investors.com/leaderboard. On this week's show, Amy Smith and I will get into a topic every investor faces from time to time: how to handle a stock that goes nowhere or even declines a bit after you buy it. We'll get into 5 factors you can look at to see if you should sit tight or cut the stock loose. Also, the September issue of the free IBD Extra newsletter just came out yesterday. In that, you'll find a new video on the 3 basic rules for making money in stocks, plus a CanSlim case study on FleetCor Technologies. From its breakout in August 2012 through the end of August 2014, you'll see how you could have applied buy, sell, and hold rules at critical points during its huge advance. To check that out, visit investors.com/IBDextra. And for info on how to tune in to this week's radio show, visit investors.com/radio show. That's the IBD stock analysis for Friday, September 5th. Thanks for watching.